Hello all. Today this is not a stock specific video. Obviously until first week of July जब Q1 के results आने चालू होंगे तब तक तो कुछ stock specific बातें तो नहीं करेंगे हम. I just wanted to share my opinion on book value per share as a metric. I have seen a lot of people and a lot of my friends as well compare stocks or value stocks based on book value. Uh, I f- I wanted to share my opinion on why this is wrong and what is the only exception where this rule can be used. Okay, first of all, what is book value per share? Book value per share is basically the book value of the assets divided by the number of shares what is available. In simple words, this is that. Now coming to what is book value, what exactly is book value? I covered what is book value per share. Now what is book value? So whenever you buy an asset in the business, you have to record it as per accounting standards, right? So as per accounting standards for fixed assets, there are two types of rules what you can follow. This is in pure layman terms. I'm not, I'm not adhering to the standards or accounting standards over here. This is in pure layman language. As simple as I can explain it. Uh, yeah, so there are two ways of accounting fixed assets. One is the historical cost method, which says that you record assets based on the price you have paid at the time of purchase. And second is the revaluation model. Revaluation model is basically where you decide intervals, लाइक हर एक साल में हम रिवैल्यू करेंगे एक एसेट को और उसका फेयर वैल्यू डिटरमाइन करेंगे और उसके हिसाब से वही वैल्यू बुक्स अकाउंटिंग बुक्स में होगा. दिस इज फेयर वैल्यू अकाउंटिंग. नाउ व्हाट हैपेंस इन मोस्ट ऑफ द बिजनेसेस, मोस्ट ऑफ द स्टॉक्स और मोस्ट ऑफ द फिनेंशियल्स इज दैट दे विल बी फॉलोइंग दिस हिस्टोरिकल कॉस्ट मॉडल. सो मान लो अगर आपके पास एक प्लांट है, आपने 2010 में प्लांट लगाया है और 2010 में जो प्लांट लगाया था आपने कुछ 100 रुपये का खर्चा किया. अब आज भी 2026 में भी आपका योर प्लांट इन द बुक्स, योर प्लांट वैल्यू इन द बुक्स विल स्टिल बी 100 रुपीज़. बट इन केस ऑफ अ रिवैल्यूएशन मॉडल इट विल बी रिवैल्यूड एवरी ईयर. 2010 में आपने एक्वायर किया, 2011 में आप रिवैल्यू करेंगे, 12 में, 13 में, ऐसे करते 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 26 तक आप रिवैल्यू करते आओगे. सो द इन द रिवैल्यूएशन मॉडल दैट the value of that asset will be the fair value, the market value of that asset. However, in the cost model, what will happen is it will still be in the value of that 2010 wala purchase price. 2010 is a very vague example, but still, for the example purpose, we can take that. Yeah. So what will this lead to? Because the assets are at the historical cost, when you take the book value, you will be taking the historical cost values and dividing it by the number of shares. इससे क्या होता है, you are not getting the actual value of the business, right? You are just comparing some 5-10 साल पुराना वाला cost to the current market price and deciding something, which is, I mean, how logical it is, right? But the one exception to this rule is financial companies. Any financial institution or any financial lending company or a lending which has a lending or a borrowing business, इसमें आप ये बुक वैल्यू पर शेयर देखना देख सकते हो और देखना भी चाहिए. वाई? बिकॉज एज पर इंड एस, विच इज द अकाउंटिंग स्टैंडर्ड्स फॉर लिस्टेड कंपनीज, व्हाट हैपेंस इज all the assets of a financial business is usually lending, loans lent or borrowings taken, right? So as per Ind AS, what has to happen is all the financial assets, all assets which qualify as financial assets, have to be at fair value. And this fair value, there are multiple things. The fair value gain or loss goes to the profit and loss, and sometimes it goes through something called as OCI, which is too much technical, इसमें नहीं जाता है. So basically what I'm trying to say is, in a financial business, every time, at any point, any balance sheet date, the assets are always at fair value. Usually almost all the assets are at fair value, and that's why valuing a financial business at book value per share, you usually say, right, the NBFC is trading at X, NBFC is trading at 2 times book value, 3 times book value, but you never say X FMCG company is trading at 3 times book value. It does not make sense, right? And that's what I wanted to highlight in this video, ki book value per share is only relevant to financial companies because the balance sheet of a financial company has to be in the the assets has to be at the fair value, but not necessarily for a FMCG or some industrial company which has उनका प्लांट 2015 में बिठाया गया है, अभी भी उनका कॉस्ट वही होगा. So because of this, we should not be comparing book value per share. That's what I wanted to highlight in this video. Hopefully you have understood this concept. We'll also be covering the market updates from July quarter. Hopefully this quarter we'll be able to make more what coverage of more companies. Yeah, that's it. Thanks for watching.